So I'm going to be going over the top 3 option plays that I'm planning to trade into this week, the top 3 stocks that I'm currently watching. We are at some amazing levels with some amazing setups setting up. With that being said, I'm going to walk you through the overall price action analysis. If you use these levels along with the unique patterns that I've created, that I taught you throughout these videos, you should have a phenomenal trading week. Let's get straight into analysis. So in terms of the first ticker, it is going to be SPY. Then we're going to go over Amazon. Then we're going to go over Tesla. Let's get straight into the analysis. So in terms of SPY, based off of the overall daily chart pattern that I'm seeing, it's going to attempt to set up overall bullish into the week. So I'm going to be focused on buying the dips. I'll also be sharing with you key levels of interest where I am interested in buying put options. Let's get straight into the day trading opportunities. So in terms of the SPY, the first thing we're going to do is look at the overall extended hours chart here, and I'm going to be sharing with you the make or break level. This is going to be the level where if we crack, the bears are going to be in full control. And I'm going to explain to you on why that is here. So first things first, we're going to go a little bit further back throughout the 30-minute chart here. And this is the level that I'm looking at. You could see right here, we have support on the SPY. This used to be a previous closing price towards this 551 level, right? So in terms of this overall 551 level, you can see when it cracked and reacted as a resistance level right here on the next 30-minute candlestick, turning that previous low on this 30-minute candlestick into a new lower high. It had a massive sell-off very, very quickly to 539. That's why you need to be aware of this 551 level, because you can clearly see this is a make or break support level. When it reacted as support, it quickly spiked to 554. When it reacted as a resistance, cracked, formed a lower high, red bearish 30-minute on the 30-minute chart here, 30-minute candle, it had a massive sell-off to 540. Then it started to bottom out. So this is the main point that I want to go over in terms of the SPY. You can see in terms of what had happened, we ended up bottoming at the key level. We had some bullish confirmations here in the pre-market towards this 551 level. You guys are well aware, if you are inside of Team Roar, nearly every single morning trading session is green with a trade that typically goes up 100% plus. In terms of what we did inside of Team Roar on Friday, we ended up buying Tesla call options at market open. You can see right here at 9:35 a.m. Let's buy 220 Tesla calls for 60 cents a contract. We ended up selling those call options at the speed of fucking light for nearly a 100% profit return at 112 cents a contract. With that being said, you can see the SPY ended up forming very strong bottom wick support, green bullish 30-minute confirmations, and then a very nice clean breakout along with the green, red, green pattern. You see how the green, red, green pattern is bullish on a slanted uptrend. You see how the bottom floor is at the previous closing of this 30-minute candlestick, turning this previous resistance into support. All bullish reasons to be buying call options. That strategy that I've been teaching you has been printing non-stop. If you go back throughout and watch the videos, when you're seeing those confirmations with the green, red, green pattern, it just keeps on working non-stop. Even the day before, we had the green, red, green pattern. The new floor is above the previous resistance, tends to spike, right? So the point being is, this time it reacted as support. And if you study the history, it said it was going to try to spike to 554, which it did, and then it started to drop. So what you need to understand is, heading into this week, for the bears to take full control, you need to see a crack under 551. You need to see a red bearish 30-minute confirmation, a lower high forming below that level. If that occurs, the next level that we are going to drop to in terms of the SPY, now I'm going to disable extended trading hours and I'm going to show you how I break this down. This is going to be the next support level, right? The next support level is at 549. We cracked 551. The next bottom wick, the next support level is at 549. History shows if 551 reacts as a resistance level, then it's going to try to quickly drop to 540. And that history has been repeating very similar, because you notice when it bottomed at 551 last time, it went to 554. So measuring that overall history and price action has been working fairly well on the SPY. So we're going to continue to do it using that overall history of those bull and bear traps. So speaking for this overall bull trap, if we crack 551, we're not just going to drop right away to 540 like last time. This is going to be the true challenge. So 551, this is going to be your make or break level. If it cracks, reacts as bearish, the bears are taking full control of the SPY. The next level we drop to it's going to be a 2-point drop, 549. As you can see right here, we have strong bottom wick support that is not tested. Now, this is what we call a gap breakdown. When you find a stock that gaps up and you take the low of day, that means that once the SPY, once the market closes there, once it goes under that low of day, there's no support. You see, look at the chart. If we disable extended hours and you see 549 right here, if it cracks, there's no support. So if it reacts bearish and forms a new lower high and it cracks with that red bearish 30-minute confirmation, then it's going to have a massive sell-off. It's floating up on thin air, and history shows if 551 reacts as a resistance, then it can quickly drop to 539. So if they can take out that 549, it's going to start to quickly drop. It's held up on thin air. There is no support, and this is what's going to happen from there. It's going to try to test, and it's going to try to bounce in between this zone, and this is where a potential reversal can occur, and this is where you're going to want to buy call options in terms of an oversold level for a reversal if the bears do take full control. So 544.20. This is previous resistance that has not been tested. You can see right here, resistance, resistance, resistance. SPY has a gap up, and then it has a gap and go. So if it drops back down to this previous resistance, it is going to try to bounce and reverse first. Why? Because the SPY had such a massive breakout in gap and go from this 544 level. If it has an overreaction to the downside, meaning if it can quickly drop back down to the 544 level just as quickly as it went up from this overall level, if it can lose the bulk of its gains in a very quick period of time, that makes it more likely to have a reversal and bounce. But if we're going from 544 with no retest, it had the breakout, had the gap and go, but it never dropped back down to retest. It had the break, but it didn't retest yet. And it's more likely to have a reversal once it retests if it can quickly lose the gains. That's what will make it a better confirmation, if it can quickly drop back to the level, right? So this is a massive move from 544 to 555, right? So we're talking 11-point move to the upside. If it can quickly drop back down to that previous resistance, it's likely going to bounce first, react to support, right? So this would be a great reversal level, a great bear trap level. And another reason why is previous resistance to react to support, break and retest to react to support. Also, the gap. There is a gap towards that previous resistance at 543.80. So the reversal zone is going to be 544.60 to 544.380. That's going to be the zone to overall buy call options. And then in terms call options, levels below that, you can keep an eye on this overall 539.70 to 540. You got strong bottom wick support that has not been tested here. History showed last time the exact bottom of that bear trap was towards the 539 level. And then you have a new gap breakdown level towards 537. And then you got another gap close reversal where we're planning to buy call options. Once this previous resistance is tested, it's likely going to react to support for a gap close reversal as well at 533.70. So save all those levels in all those informations. Now, let's discuss the bull case scenario in terms of the breakout, right? Because right now, in terms of the bulls to maintain bullish, we are at some serious resistance. So in terms of what they need to do, they need to stay above 551. They need to maintain above 551. Like I said, if we crack under 551, shit's going to hit the fan. Bears are going to start to take full control. From there, they just got to take out 549 for the massive flush. So first of all, it must stay above 551. But to truly maintain overall bullish, we need to hold above this 554 to 553 zone. So in terms of the breakout level is going to be 554.31. Next level above that is going to be 556.74. And then the next level above that is going to be 560. Your next resistance level is 560. Now, some things I wanted to note about this 560 level. This is a gap breakout level. So the SPY had a gap down. You take the high of day. There's no resistance. You could see right here, the high of day is at 560.50. When it breaks above that, there's no resistance, so it's going to start to fill the gaps. There's a gap that's waiting to fill above right here at 561.50, and then the next level is 564.90. So in terms of resistance levels to keep an eye on for put options, you can keep an eye on towards this 562 to 561.50 zone if you're seeing a red bearish 30-minute confirmation towards that zone. You can also keep an eye on, this would be the true best level, the highest gap to fill above at all-time highs, 564.90. Those would be the overall put levels, right? So for the bulls to maintain overall bullish, They cannot go under 551. For strong bullish momentum, they need to maintain above 553. Clean break above 554 is going to send us to 556.70. Next level above that is 560. Then from there, we can eye on puts at 561.50 to 562 and 565. So that's how I overall view the market. And in terms of all the levels that I gave you, they're not all created equally. So in terms of levels that I'm very interested in, I'm very interested in the 551 level. I'm very interested in the 549 level. I'm very interested in the 544 to 543.80 level, right? So I'm very interested in seeing, if that level cracks and the bulls take full control, I'll do the put options, ride it back down for a nice bull trap. And then if we drop back down to 544, well, that's going to be a great oversold level to be dip buying call options, right? Just understand we are at some major resistance, but the bulls are maintaining control. Because in terms of the history, they did bottom at 551. And if you look at the 30-minute chart, we are maintaining higher support. You have a green, red, green bullish pattern right here. The floor is above this previous resistance right here. That's very bullish. Confirmation of buy calls in the opening based off of everything I've been teaching you. You have another green, red, green pattern right here. And as long as we're maintaining, to maintain super bullish, just hold above this previous break and retest resistance at 553. So that is my overall market analysis. Those are the levels that you're going to want to pay close attention to. Make sure you're using all the 30-minute patterns that I've been teaching you. They work phenomenal. It's a great foundation to be trading at these overall levels. So I gave you the levels. Make sure you're executing in terms of all the strategies that I've been teaching you along with all the trade recaps at these overall levels. You should not have a problem going green into this week. If you use these levels, you wait patiently for these levels to hit, you wait patiently for the confirmations to form towards these levels, man. Losing should be a choice in a sense if you are patient enough and you implement and execute on this overall system in terms of self-sufficiency properly. So with that being said, that's my overall analysis on the SPY. Now, in terms of Amazon, I wanted to bring up Amazon because this stock is at a very interesting level, man. In terms of the level, you could see right here, this is make or break. Take a look at this level, man. We're going to have a very volatile move coming up here on Amazon. 177. When 177 reacted as support, we quickly went up to $189. Massive move to the upside. When it reacted as a resistance, you could see it just kind of had a massive gap down towards above that level. And then it just kept on dropping. So this is going to be a make or break level. This right here is make or break. The level is going to be 177. If we break out, react to support, you're going to want to buy call options, ride it up to the gaps. You got a gap to fill right here at 181. You got a gap to fill here at 183. If we break down, react as a resistance, so in terms of for the bears to start taking full control of Amazon, you're going to need to see a hard crack below this 176. If that occurs, you can try buy and put options, ride it back down to 174, and then as you can see, we have a gap breakdown right here at 174. If that cracks, then we fill the gap below at 170. Once we drop back to 170, previous resistance can react to support. Look for a bullish gap close reversal, man. So this is going to be a phenomenal opportunity to be trading at because we are at such a volatile level with the core setups that we're known for trading. So this is a make or break level. As you can see, this is make or break in terms of bull or bear trap, man. It's going to be such a massive trap at this level. You can see when it reacts to support at this level, big move to the upside. When it reacts as a resistance, big move to the downside. There's a gap to fill above here. There's a gap to fill below here. So wait patiently for some price action to play out, for the chart to develop a little bit. And then once you can confirm if it's forming a support level or forming a resistance level towards that overall zone, if the bulls or bears are getting overall trapped, if there's some sort of, confirmation of a bullish pattern or a bearish pattern or a trend reversal overall confirmation, then you're going to want to take action at this overall level, man, because a big move is coming up on Amazon. So that's going to be a great setup, man. It's at a make or break level, fighting to fill one of those gaps. It's going to be a phenomenal setup to be watching heading into this week. Now, in terms of Tesla, Tesla is at an interesting level. It's kind of similar to Amazon, but I do like the Amazon setup a little bit more, but it's kind of similar in a sense. So if you take the closing price of this candle towards this 217 level, you could see this is going to be a massive move waiting to occur. So Tesla has a gap to fill at 201 and it has a gap to fill at 232. So you can kind of say that Amazon and Tesla, they are both at this make or break middle level fighting to fill one of those gaps. And then once one of those gaps fills, then you could play the reversal at one of those gaps if you're getting the overall confirmation, right? So basically 2 setups are setting up to occur into this week on both of these overall stocks. Make sure you're trading at these overall levels. Right now we're at the make or break level to fill one of the gaps. Then once one of the gaps fills, we can potentially have a reversal at the gap. So you have to be able to confirm if it's going to have a reversal using the reversal strategy, right? So just go back, watch all the videos. It'll help teach you some of the basics on how to confirm if it's going to have a reversal, how to confirm if it's bullish or bearish. Watch the overall recaps. Now, with that being said, 217 is your make or break level. We break out, we react to support, we're going to explode up to fill the gap. There's a gap to fill at 231.90, major resistance at 231.90. There's a small gap to fill here still. If we react bearish, play puts at 231.90. So we're make or break, try to fill the gap. If it goes bullish, look for bullish confirmation. Now, in terms of bearish confirmation, to flip bearish, we're going to have to go under 215. Crack below 215, we're going to start to flip bearish. We're going to start to fill the gap below. But the make or break level, if you look at the 30-minute chart, the gap breakdown level is going to be right here at 205. So if we're starting to crack like 214, 211, we're heading back down to 205. Then from there, we go to 201. And I really like this setup in terms of a gap close reversal. Another reason why it can potentially work well is because this is a nice whole key round number that a lot of people are going to be targeting, very likely to have a bounce at this level. So previous resistance to react to support, $201. And then you have the gap that's waiting to fill below at 201.43. So those are going to be the overall best setups that we are planning to trade at. Now, for those of you who are serious in being a part of my secured private organization, it's going to be the first link down below within the description. You could begin trading with us tomorrow. In terms of what you're getting access to, you're getting access to our real-time trade alerts. We have a real-time zero-date options trading alert system. We are known for buying cheap, far, low risk, out-of-money option contracts. We are known for selling them deep in the money for the biggest percentage gains within the market with the highest win rate in the game doing it, a 90% plus win rate in the game doing it. So inside of Team Roar, you're going to see there's going to be updates in a new morning game plan. You're going to see it all the time. The long levels, the short levels, giving you an update in terms of where to buy and where to go short. The game plan tends to be flawless, so make sure you're following along with the new game plan, right? And in terms of the trades, you get access to a real-time zero-date options trading alert system. So the ticker, the strike, the entry, updating the quote prices, and you have to understand this is not just callouts, this is not just real-time trade alerts. You are going to learn how to trade just by trading alongside with us, right? But you need to understand that this is a real-time options trading alert system. So to give you some background, we are known for holding our trades for longer periods of time, right? To get the biggest percentage gains in the market, you're going to have to hold a little bit longer. If you're buying further out, 3 to 5 point strikes out of the money, you know, it's going to take some time to sell those in the money. And that's what we're known for doing. We're known for buying further out. We're known for selling them in the money for the biggest percentage gains within the market. And then in terms of the background to the system, the contracts are so cheap, so low risk. Just as any trader, they have a max risk per trade. We are putting in our max risk per trade into the entire value of the contracts, right? So let's say we're taking a trade, 60 cents a contract. That's $60 for one contract. Bare minimum to entry is $60, right? So in terms of that overall position, if we're risking 2% of our account per trade, that means if the contracts go to zero, we lose 2% of our overall account, right? So we're putting in our max risk per trade into these overall contracts. And then in terms of the system that we've created, we do not use stop losses. We've been in many trades, in my experience, 70% of the time. When we enter a trade, and like I said, we're holding for very long periods of time, you're gonna have to adjust to a new system if you are interested in trying this out. We've been in many trades where it drops 50, 60, 70%. We call it the dead plays. The dead plays are the trades that drop 50, 60, 70%, right? It's not a big deal because we're putting in our max risk per the trade. So if the contracts expire worthless, we're just losing our max risk, just as any trader loses their max risk per trade, right? But one of the differences, we do not use stop losses. The contracts have the entire day till market close to go in the money, and we're trading zero-date options. And like I said, 70% of the time, the dead plays that drop a lot percentage-wise come back to life, go in the money, start to go up. And then in terms of adding, this is another thing that we do with the zero-date options trading alert system. We add to winners. So the main reason why we decide to add to winners is when we win, we tend to win big. When we're up a little, 10, 15, 20%, we tend to win big. 100%, 200%, we tend to win massive, right? So when we're up a little and we're seeing winning confirmations, especially on the 1 minute chart, that it's about to continue to work in our favor, we add to the winners. And then step 3 is to set the profit stops. We set a profit stop shortly after adding to the winner, shortly after we get that quick winning move in our favor, as we just added, right? To not only secure our profits, to go green to red, but setting a profit stop is going to set you up for success to continue to maximize your winnings as you're holding. You move the profit stop up. You add to winners, you set the profit stop, you move the profit stop up as the trade is beginning to go up in your favor, because you do not want to see a massive drawdown. If you're up 100%, you don't want to have a profit stop set up to stop you out if you drop back down and you get stopped out for 30%. No, you want to keep on moving it. Move it up to 60%, 70%. Just keep on moving the profit stop up. That way, if the market has a big move against you, you're going to protect not only your winnings, but that position where you average your cost up a little bit. You're going to protect your overall average too, and you're going to protect the vast majority of the entirety of the winnings, man. A big move is not going to hurt your winnings in a sense. You get stopped out for profits. We do not get stopped out for fucking losses, man. Inside of Team Roar, we do not use stop losses. We do the complete opposite of what everyone else is doing, and we win. And we win non-stop. It is a 90% win rate. We are printing at the speed of fucking light. So for those of you who are serious about trading with us inside of our secured private organization, it is the first link down below within the description. We will see you guys tomorrow.